Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in business reports. Today we're diving into FGI Industries Ltd to see if they're really on solid ground or just putting on a good show. You know, some companies go through a bit of a roller coaster, and FGI Industries Ltd seems to be one of them if this report is anything to go by. They've had a bit of a scare with the stock market, but are they back on track? Let's find out before we dive in. If you want more of these straightforward breakdowns of important company filings, hit that subscribe button and join our Discord community linked in the description below. It's the best place to keep the conversation going. So what exactly are we looking at here? It's a Form 8K, which is like a special announcement to the public when something significant happens with a company. For FGI Industries, the big news dropped on August 14, 2025. Now, FGI Industries Ltd has ordinary shares, and they also have warrants. Think of warrants like a ticket that allows someone to buy the company's stock at a specific price later on. Both of these are actually traded on the Nasdaq Stock Market LLC, which is a pretty big deal. It's a major US stock exchange. Here's an interesting tidbit. FGI Industries is labeling itself as an emerging growth company. This means they're relatively new and might have some special rules they can follow, especially when it comes to financial reporting. It can give them a bit more flexibility as they grow. The main reason for this report is something called Notice of Delisting or Failure to Satisfy a Continued Listing Rule or Standard Transfer of Listing. That sounds a bit scary, doesn't it? It generally means a company might have run into trouble staying listed on a stock exchange. For a company like FGI Industries, being listed on a big exchange like Nasdaq is crucial for investors to buy and sell their stock easily. Okay, here's the good news. On August 14th, the company got official word from Nasdaq, and guess what? They've actually fixed the problem that was causing them trouble. The main issue is something called the minimum bid price requirement, basically to stay on Nasdaq. A company's stock price can't just drop too low. If it falls below a certain level for a sustained period, Nasdaq can decide to kick them off. This is really important because it signals investors that the company might be in trouble. But FGI Industries has managed to turn things around. They've brought their stock price back up to meet Nasdaq's rules. This means they are now in the clear and will continue to be traded on the Nasdaq capital market. This is a big win for the company and its shareholders. It suggests that whatever steps they took, whether it was improving their business, a marketing push, or even just favorable market conditions, it worked to boost their stock value. The report is signed by John Chen, who is the executive chairman, and it's dated August 15th, just a day after they got the confirmation about regaining compliance. This shows they're moving quickly to officially inform everyone about this positive development. Now, looking at this report, the big story is about FGI Industries successfully navigating a tricky situation with Nasdaq. They were at risk of being delisted, which means their stock might not have been available for trading on a major exchange anymore. This would have made it much harder for investors to buy or sell shares and would have been a huge blow to the company's reputation and access to capital. The fact that they've met the minimum bid price requirement is a strong signal of recovery, or at least stabilization. However, this report doesn't give us the nitty-gritty financial numbers like revenue or profit that would explain how they achieved this. We only know that they achieved it. This could be due to various factors. Perhaps they had a specific plan to boost their stock price, like announcing new products or partnerships. Or perhaps the market simply became more favorable to their industry. What we don't see in this particular filing are any specific financial tables that would let us dig into their sales or earnings. This is a very focused report just on their listing status. For a deeper financial analysis, we'd need to look at their quarterly reports like the 10Q filings. But based on this 8K, the key takeaway is that FGI Industries has dodged a bullet in terms of staying visible and accessible to investors on a major stock exchange. However, we should also consider that regaining compliance with a minimum bid price requirement is often a reactive measure. It doesn't necessarily mean the underlying business is suddenly booming. It means they've met a specific technical rule. The real test of their long-term health will be consistent revenue growth and profitability, which we'll need to look for in their other filings. So what's my take on FGI Industries based on this? It's a positive step, no doubt. They've shown they can respond to regulatory pressures and maintain their stock exchange listing. This is good for investor confidence. The risk of delisting has been removed, which is a major hurdle cleared. The opportunity now is to build on this momentum if they can translate this success in meeting listing requirements into strong operational performance and financial results. They could really see their stock value climb. The weakness, we still don't have a clear picture of their financial performance behind this stock price recovery. Are they profitable? Is their revenue growing? We need more information. The story here is one of survival and meeting a critical benchmark, but the next chapter needs to show sustainable growth. Alright, that's our decoder on FGI Industries' latest filing. They've kept their Nasdaq spot. What do you think about their ability to maintain this going forward? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more insights from the world of corporate finance. And don't forget to check out our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.